Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it an uneasy calm because that's where we sit. The market has had a heck of a run. It's very concentrated in some of these big tech stocks. And boy, I tell you, I had to laugh. I was watching CNBC one afternoon, and they threw, you wonder who puts some of these headlines on the screen. You know, who's sitting there typing and who's telling them to type, what they put up there. But I thought it said, is big tech the new safety trade? And I had to laugh. I looked at that and I thought, you got to be kidding me. But anyway, we've all seen what's going on in here. And here's an example. I know I'm going to talk about the Nasdaq 100 today, but look at this tweet by Carl Quintanilla. And he was talking about what Susquehanna had put out in, statistics. Again, this is kind of a build on the theme that I talked about last week. And these 7 stocks, without these 7 stocks, the S&P 500 would have been negative so far this year. And again, this was through the close of, I think, last Wednesday. These 3 stocks, Apple, Nvidia, and Microsoft alone have contributed 91% of the gain in the S&P 500. So you can't get much more concentrated than that, and that is not healthy. Pretty extreme price action. So we're sitting here with an uneasy calm before the storm, okay? And we're going to take a look at some of these indicators. We're going to look at the Nasdaq 100, the NDX. We'll look at the Qs also, which is going to just mirror exactly what the NDX is showing. We'll take a look at the VIX. There's just a handful of readings that are lower than where we closed on Friday. The McClellan oscillator, look at the net high lows on the New York and the Nasdaq. And then I'm going to look at 2 more stocks today, Amazon and Nvidia. And Nvidia is kind of an update. You know, I talked about it, I think it was back February 19th, something like that. So a little bit of an update on what's going on with Nvidia. Yes, it has continued to push higher, but it's getting pretty stretched. All right, let's start off here with the side-by-side view of the Dow Industrials, the S&P, and the Nasdaq 100. I am showing the monthly view in here. Let me make sure I've got that. Yep. And here's the readings for the month. The Dow is up 617 points for the month, S&P 500 139, and the Nasdaq 100 a whopping 1139. Big move here for the month. So here's the 3-month move for the start of the year, the first quarter. And there's been a lot of talk about how big of a first quarter was for the Nasdaq, the biggest since second quarter, I guess, of 2020. So we'll see what kind of continuation we get out of this. This has been lagging, these others in terms of the retracement rally, the bounce, the little bear bounce that we've gotten. The Dow's had the biggest, and then the S&P is in second place, and then now the Nasdaq's playing catch up. And if you look at it, I can show you right here. Let's just take a look at this. You can see how we've gotten above the 61.8%, didn't quite get to the 78.6 here. Let's see. Let me press that button. Let me do it right here on the S&P. And here's how that looks, slightly above the 50% level on the high that occurred in February. And then when we look over here on the Nasdaq 100, here's how that looked right there. Now we're just above, we haven't gotten to the 50% retracement even yet. So we may have a little bit more. We're going to talk about that. But we are getting pretty extreme in some of these stocks. We're a little bit above 38%. Okay, so let's take a look. That's the monthly view. Let me flip it back to the weekly view here. And we got to go to a different place up here. There we go. So here's how we've looked for the last week. The Dow was up 1,037, big move. The S&P up 138, and the Nasdaq 100 up 414. So big, strong move in here, 3 weeks in a row on the Nasdaq 100, actually for all of these. The S&P, the Dow not so much. 3 weeks ago it was down. So we've had 2 weeks in a row on the Dow. Let's look at the side-by-side on the industrials versus the transports. Now here's the monthly view. Here's how the transports look for the month, down 284 points for the month. So all these others were positive, but the transport's negative. Let's take a look at the weekly view. Let me flip it back to the weekly right here. Look how we just snapped back up to the trend line, basically. You know, we broke down, shattered that counter trend, zigzag pullback pattern that we had in here in ABC. And then now it looks like we've just pulled back up to the trend line. Is this the kiss goodbye? Are we pulling back up and then we're going to roll back over? I think we're going to find out this coming week. All right, let's go back. We're going to take a look at the Nasdaq 100. Here's the daily view of the Nasdaq. It was up 218 points on Friday. Let's take a look at the, so this is how we've trended up here. We've gotten above this high right here, the February 2nd high. The other thing I want to point out, and let me go to the Elliott Wave picture. Here we go. The other thing I want to point out is that, you know, this move has pushed above a level I was watching. I think it was 13,125 on the NDX. And that would make this move from the October low to the high on Friday bigger than the August move. So therefore, there's no way this could have been intermediate wave 2. So we have pushed to that on the other major indices, but the Nasdaq's been a little bit of a laggard. So here we are. So we're approaching we're either there or we're approaching it, the peak of intermediate wave 2. So what am I looking at with these various Fibonacci relationships? What we're looking at here is 2 versus 1. So this is a retracement of intermediate wave 2 of intermediate wave 1. And where are we sitting? We're in between the 38.2 and the 50% level. So we haven't gotten to the 50% level. Okay. Also looking at the pattern in here on a C wave, I'm not really seeing what looks like a completed 5-wave move for a C wave. Okay, so yeah, we could continue to push a little bit higher. When you look at Y versus W, we're looking at a big combined complex corrective pattern. This looks like an even more complex zigzag over here. And then the X wave, 3-wave X wave, and then a zigzag pattern for Y. Okay, well, how does Y compare to W? You compare those just like you would an ABC zigzag. Well, the length of Y has gone beyond equality. It's gone beyond the 138.2% level. My next target would be 161.8. So now you start to get up into this level here. You start to approach the 50% level. And then there's one other thing to look at, and there's multiple things to look at, but there's one other one I got on the screen, and that's C versus A. That's within the Y move. How's this zigzag playing out? Well, you could see the first level I would look at is 61.8% of A. Well, we've gotten beyond that. But to get equality, where C would equal A, that would be all the way up here at 13,905. So, you know, you look at these and say, okay, these are possible thresholds, possible targets as we move higher. Another one to just think about is the August high. Could we continue to push up in here into the August high? Now, I know this doesn't give you any certainty as to, hey, you know, I'm not saying, hey, we're going to go to X. But what we do is we look at possibilities in terms of paths forward. Where could targets be, like the 50% level? And then you look and say, okay, are we getting any kind of 5-wave structure in here? Well, we're not quite there yet. We just got a little bit overbought. So yeah, I think we could continue to push a little bit higher. But we know that these are getting very extreme also in here. All right, so that's the Nasdaq 100 picture. Let's take a look at the Qs, and it's going to be very, very similar. So here's the picture with the Qs. So here's how the numbers look. Yeah, I mean, we're in that between 38 and 50% on retracement. Now, you know, when I think of a second wave pullback, I usually think of a fairly sharp a pullback. My target is usually a 50 to 61.8% retracement, but you don't have to. There's no rule that says, oh, it's got to go at least 50% or it has to go to 61.8%. No, it doesn't. That's where you've got to look at the form of what's going on. And okay, yeah, we are into the zigzag within the bigger zigzag. And so now what are we getting? And this is back to watching this form unfold in here. Okay, so that's where we're sitting. Same exact type of relationships. And we closed at 321.30. And yeah, the number on the Qs was 319. If we stretch above 319.40, I think it was 319.40, then that makes this wave bigger than the August high push. So this is intermediate wave 2. So here's where we sit. We're trying to get intermediate wave 2 complete, and then the rollover is going to be into intermediate wave 3 to the downside. And remember, in Elliott Wave structure, okay, when you have a 5-wave move like what we got from November of 21 to the October low, that's telling you the primary direction of the market, and that what we are doing in here is counter trendish. Primary, counter trend. Okay, this right in here. Okay, so that's what we're watching for. We've talked about the concentration of what's happened in here, the speculative fever that took over January and rolled over into February. So let's take a look at a couple of our indicators. Okay, so here's the VIX. We closed at 18.70, down 0.32 on Friday. So yeah, we're back down now. For 4 days in a row, we've closed below 20 on the VIX. There have been a handful of days where we closed lower than that since the first of the year. Not very many. This is the territory down in here where price action peaks. Okay? When you get down into this uneasy calm, I call it. Okay? Because everybody knows there's some things going on underneath. Like when this eruption happened, when was that? That was the SVB, the bank that went under, and then there was a Signature, and then there was Credit Suisse, and then there's a whole rippling effect into a bunch of other banks and regional banks, etc. Okay, I love that where I watched or I read, I think it was on Bloomberg, and they were interviewing one of the guys, and he was talking about it, and he said, there's never only one. When you see one cockroach, and I'm not saying the banks are cockroaches, but he's putting making the analogy that when you see one cockroach, there's never only one. And believe me, down here in Texas, there's never only one. So the same kind of thing, I think, is what's underneath the surface in here in the bank situation. And it's like, who knows what's next? But that's why I think right now we're sitting with an uneasy calm in here. Let's take a look at the McClellan oscillator. Let me pull that up. Okay, here's where I keep track of all the numbers, the advancing and declining on the New York Stock Exchange over here. Strong breath on Friday. We've had 3 out of the last 6 days were fairly strong, but the interesting thing is we're getting a little extreme here. Now, the 10-day breadth percentage is now 62% advancing as a percent of the total of advancing and declining. Now, when we start getting above 60, we're starting to get extreme. And the McClellan oscillator is sitting at plus 254 here. And here's the picture. This is extremely overbought, okay? And it doesn't stay up here very long. It can chop around in this territory sometimes for quite a while. But boy, this move reminds me in a way of the move that happened back here in May of 2022, because we just kind of went vertical very quickly in here before the June collapse. So it's going to be interesting to see what we get. But that's where we're sitting here with the McClellan oscillator. So the market is stretched right now and severely overbought. So, and then you combine that with the where we're sitting with the VIX and that uneasy calm I talked about. The other thing that's going on that I wanted to show you is the high lows on the New York. So as the S&P has kind of rallied and the Nasdaq has rallied, the net high lows, this is from February 2nd, this peak right here, okay? You can see the peaks are low, and yeah, we had a little break of this trend line, but the whole point is this has really not confirmed a major thrust higher in here. And we have the same picture, even a little bit worse on the Nasdaq. It's minus 51 on Friday. The net of the 52-week highs minus 52-week lows. Well, the lows are winning still, and the trend is not confirming any kind of push higher that has occurred in the Nasdaq. Okay, so again, a sign of weakness, a sign of the narrowness that we talked about. All right, let's take a look at Amazon. Okay, here's the weekly view of Amazon, and it's interesting. This has been one of the weaker big cap stocks, I guess you'd call it. Are they big tech? It's like, are they big tech or are they consumer discretionary? I mean, who knows what in reality. All I know is it's a big cap stock. So it came down and actually touched the March 2020 low. So that's come down quite a bit. And you can see here's the 200-week moving average. And it broke below it, snapped back above it, and now has come down and has, stayed down below it and in a pretty substantial downtrend. Short-term wise, we're getting a little bit of counter trend move. It could be that we get a little bit more in here. Let me adjust this slightly. That's not cooperating. There we go. It's a little better. This is the daily view. We're in a little uptrend in here. We'll see how much further this wants to stretch. What I've got on the screen is I watched the Tom DeMark, the DeMark indicators. And, what this is the sequential sell setup extreme 9, and it's qualified. So I put the little diamond up here, or perfected, I guess is the right word. Sequential sell setup perfected. And then this is the sequential buy setup perfected. Okay. And so right now, this looks like we're in an uptrend, continuing to want to push to the upside. We'll see how much further this gets. But that is the picture on Amazon. I don't really have an Elliott Wave on this, but let's talk about Nvidia. I do have one on Nvidia. So Nvidia is at the opposite end of the spectrum, right? I mean, hasn't even come close to the 45.17 that occurred in March of 2020. And it came down, hit the 200-week moving average, got slightly below it here in October, and then it has rallied crazily off of that low. But this move down looks like 5 weeks, 5 waves to me, not 5 weeks, 5 waves. And here's the wave structure I've got on this. And I've talked about this back about 6 weeks ago or so. Here's the picture I've got. I'm thinking that, yes, we're in a big bull move in here. And after this big corrective, I think we're going to have another big push up in Nvidia before this third cycle wave is actually finished. That's my best take on what's going on. But what this implies is we still have another leg down coming in Nvidia. Okay, we've had 5 waves here. And again, I just talked about the primary direction. When you get 5 waves, it tells you what's the direction. Well, yeah, this whole corrective pattern is not done. It also tells you you're in a zigzag potential. If it's a corrective move like I'm anticipating, this means it's a zigzag. It's not going to be a flat, et cetera, or some other kind of corrective pattern. So right now, we're getting a zigzag back up for the B wave, okay? And so we look at this and say, okay, well, we're getting very, very close. When you look at B, let's do B versus A. I know I've got it over here on the daily, I believe. Let me go there. Here, pull this over. There we go. Here's B versus A. Okay, so when you look at a zigzag and you're looking at B versus A, when you have a zigzag pattern, what you target is a retracement of 50 to 79% in this zone. And we're well up into that. So I think we're getting very close to the end of this on Nvidia. And when I look at the moving average view, let me just hit this arrow right here. We've had a series of DeMark extremes. Okay, we had a setup here. The setup failed. We keep pushing higher. And then we got the setup complete, the sequential sell complete right here at the 13. That failed. Okay, we got another 9 that completed here on February 11th. And then it continued to push higher, and we got a 13 here on March 23rd. So we've gotten a second sequence of these. What the 13 is telling you, that the trend is nearing exhaustion. Okay, we're definitely getting divergence on the RSI. And here, and again, this is on the daily view. You're definitely getting it short term on these indicators from this last push in here that happened on Friday. And this 9, why is the diamond over here? Because it wasn't perfected until on Friday on the 9. So watching this pretty closely. We haven't actually seen a breakdown on it yet, but we're getting there. We're up in the zone where that B wave, rolls over. So that is the picture that we've got on Nvidia. And this has, of course, been one of the darlings. And I think it's going to be, when this does roll over, it's going to be a sign that, hey, yeah, that whole sequence is done and NDX is coming down. All right, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.